welcome to this week's MFB news. I hope everybody is keeping well and warm and dry. Certainly feels like autumn, doesn't it? There's no escaping the fact of where we are now. And in terms of what we're going to cover off for you this week, we're going to do our usual roundup of lender pricing changes, what's been happening with swap rates, that kind of stuff. We're going to have a quick run through of the latest news in terms of what's being proposed in the Renters' Rights Bill. We're going to talk a bit about house prices, and then we're going to do a summary about limited company borrowing. So for those of you, and it seems to be there's a real increase in the number of people looking to buy property now, so people are starting to really wake up after being relatively quiet for a year and a half or two. So a lot of people will be looking to use limited companies. So I thought it would be useful just doing a quick kind of run through of the basics of limited company borrowing in this week's episode. Okay, so first of all, what's been happening with swap rates in the last week. So as of last night, 2-year swap rates are at 3.86, 1 month ago 4.05, 1 year ago 5.08. So as we can see, things are in a better place than they were 1 month ago and 1 year ago. But actually, if we cast our minds back to last week, things have floated up ever so slightly, and it's very similar news for 5-year fixed rates. So 3.59, 1 month ago 3.69, and 1 year ago 4.54%. So again, the 5-year swaps have gone up ever so slightly. Why is that? Gosh, it's always going to be really hard to kind of pin the tail on the donkey in this regard, but I think there's a lot of kind of uncertainty. Obviously, the news with things really escalating around Israel is not going to be helping matters. There's a bit of nervousness over the autumn statement as well. So lots of kind of things in the ether, which is just kind of pushed up swap rates ever so slightly. I don't think it's anything to panic about. I don't think we're suddenly on a massive upward turn or anything like that, but just to kind of be aware that that's what's been going on. So because the cost of funds hasn't really changed in the last week, and actually if it had changed, it changed adversely, I think it's only understandable that we're not seeing a kind of wave of lenders repricing at the moment. That said, there have been reprices in the last week, but not huge amounts. So what have we seen? So there is positives within this, don't worry. So Molo have been reducing their rates. 2 years fixed rates have come down by 0.2%. Conversely, they put their 5-year fixed rates up by 0.2%. So I think with Molo, probably what they've done is seen that actually swap rates didn't continue on the downward trajectory that they were doing so well on. So they've had to kind of readjust things there. NatWest down by up to 0.3, Virgin by up to 0.1. Landbay have made some fairly chunky reductions on their larger HMO products. Larger HMOs are for those with more than 6 rooms. And yes, they're looking very, very competitive now. Excuse me, TML have dropped their rates down by up to 0.2%. TMW, which is a big one because they're the largest UK buy-to-let lender, they've dropped their rates by up to 0.3. Leeds by up to 0.15 and LendInvest by up to 0.2. So we are still seeing rate reductions going on. But I think we always need to be mindful that it's not that every single lender is dropping their rates every single week. It's different lenders most weeks. So what we're seeing here is probably a series of lenders who either hadn't dropped their rates for a few weeks and their cost of funds had eased off slightly, or likewise those lenders who are thinking actually, I mean, and the reality of it is that we are getting towards the end of the year now. Lenders have all got their kind of lending targets for the year they want to hit. So if they can take a small hit on their margins, on their profit lines, to be able to drive in new lending, then they're going to be turning their eyes to doing that in some situations. So I think all in all, broadly speaking, actually positive news. Bit of a shame about swap rates going up ever so slightly. Like I said, I don't think there's anything to kind of get worried about here. But actually, it kind of just slows down the process that we're all kind of really hoping would be much faster, which is rates easing off. And really just to kind of keep hoping that things just continue this very gentle downhill trajectory. Okay, now there's no escaping the fact that the Renters' Rights Bill is moving forward apace. So what I want to do is just kind of run through some of the key changes for you, and then just to really briefly talk about what we can do to have a kind of voices heard with regards to this bill being introduced. So just to recap, it was introduced to Parliament on the 11th of September of this year, and it's now going through the process which will get it kind of moved into law. So the first thing that's happening is the abolishment of Section 21. This is not new, we've sort of known this is coming even under the Conservative government. There's going to be a new tenancy regime. There's going to be requirements for property standards. There's going to be rules around rent increases as well, so how you can increase rents and by what level. There's going to be tenant protections brought into place to allow tenants to challenge rent increases and also end bidding wars. We talked about this last week. So essentially what they're saying is if you list a property to rent, people can't then bid over the asking price. So all that's going to happen is that people are just going to list the properties for much higher. So it's ridiculous. But anyway, There's going to be rules introduced so that landlords need to consider tenant requests to have pets in properties. This is a really contentious one, I know. Decent home standard, that's going to be introduced. Awab's law is going to be extended to include the private rental sector. It's going to be a digital database, an ombudsman. That's a good one, by the way. I think the ombudsman is an interesting one. So this is really going to be a kind of an ombudsman service, which is going to be there to resolve disputes essentially between tenants and landlords. And I guess the hope here is that this will stop so many cases having to go to court, which will ease off the court system, because my word, it's going to get really busy because of the abolishment of Section 21. Discrimination, we're not going to be able to discriminate against those tenants who have children or are on benefits. So again, I said this many times before, I don't know a single landlord who says they won't let a property to a family who have children. But if you were one of those landlords, I'm afraid this bill is not going to be very kind to you. And lastly, there's going to be a strengthening of the council powers for enforcement as well. Now, actually with this bill, obviously we would kind of read through the kind of topic headings and they don't feel very kind towards landlords. I'm sure when we start to get into the detail, maybe some of it won't be quite so bad, but let's just wait and see. But I think the kind of key message here is that actually the private rental sector, 20% of homes in the UK are rented. So there's millions of you out here. You all have a voice. If you want to get your opinions on this rights bill heard, then what you need to do is one of two things. You need to write to your MP, or you need to join a landlord association, because these guys are lobbying on your behalf. But actually, this really is an opportunity for you to have your voices heard and kind of try and make your position clear in terms of the proposed changes coming in. Okay, moving on to house prices now. So the nationwide seasonally adjusted measure of house prices was that house prices rose by 0.7% month to month in September. So the year-over-year growth is now 3.2%, was 2.4% in August. So some positive news for house prices, unless you're thinking about buying next year, in which case this is obviously not such good news for you. The UK house prices rose sharply in September, and that's according to the Nationwide House Price Index. The Nationwide Index is the first house price index available for September, and it's shown that the MPC's interest rate cut really fed through into the markets very, very rapidly. So far, there are scant signs of uncertainty around potential for tax rises in the upcoming budget affecting the housing market. So actually, despite all the uncertainty and worry about October's autumn statement, doesn't seem to be impacting the housing market. That's kind of carrying on regardless. The survey suggests that house price growth was driven by buyers returning to market amid falling borrowing costs. For instance, the RICS survey showed that new buyer instructions outpaced instructions to sell in August, and by the largest margin since April 2022. So we are moving back into the territory where there are lots more people registering to look for property to buy than there are people registering to sell. Today's data shows a trend of steadily rising house prices seen this year continuing, with the nationwide index growing 0.5% 3 months on 3 months in September. But forward-looking indicators point to house price inflation accelerating in the coming months, so things are going to kind of pick up pace from here. The RICS Housing Market Survey found the net balance of estate agents expecting house prices to rise in 3 and 12 months increased in August, with the latest data now consistent with house price inflation accelerating to 6% year over year in the coming months. So there you go. So actually that's kind of what people are expecting now, is that if we're going to fast forward to 1 year's time, house price growth would be at 6%. So again, the message is very, very loud and clear at the moment. If you are looking to purchase a property, now really is a very good time to do it. It's still actually not particularly quick to sell a property, so there are some sellers out there who are willing to take, or have negotiation with you, let's say, on their asking prices. And actually, so if you wait for 12 months, actually you're just going to pay more money for the property. So it could be a good time to get on with your house shopping. Okay, and then lastly, I just wanted to do a quick kind of 101 on limited company lending, because we're definitely seeing an increase in the number of people who are looking to invest, portfolio landlords who are looking to kind of grow their portfolio again, having been relatively quiet for the last 2 years. But we're also seeing another raft of new investors coming into market, actually, which is quite interesting to see. We haven't had kind of fresh investors, as it were, for a little while now. So I'm not entirely sure what's sparking that, but obviously we're delighted to have you guys on board. But the reason I wanted to talk to you about limited company lending is that for some of you guys, actually this would be quite interesting, therefore, to be considering when you're thinking about using a company structure. The other thing is that we are seeing another wave of people who are considering incorporations at the moment. So this is where you would take properties that you own in your personal name and move them across into a limited company ownership. And people are doing that as a kind of in anticipation of any potential capital gains tax changes that come in October. Now, just to say, if you are thinking about doing this, you really do need to get tax advice from a qualified advisor, because it's not straightforward. You know, there are potential costs involved in doing this, so you really want to kind of make sure you've got your maths nailed down before you do anything. But certainly this is something which is really piquing people's interest again. So limited company lending. So the first thing we get asked all the time is, does the company that I want to borrow through have to be up and running for a number of years? The answer is no. You can set up a limited company on Companies House. It's very, very cheap to do. Please don't use an online service when they're going to charge you hundreds of pounds. You don't need it. I think these days they put their price up. I think it's about 35 quid. You go online, you put in some really basic details. The hardest thing when you're setting up a limited company that I found was choosing the company name. That took me ages. Beyond that, it's really straightforward. And the company literally incorporates overnight. So next day you have a limited company. Now, once you've got that limited company, you can make a mortgage application in that company name. So straight away, you can apply to borrow money through that. How come you could do that? Why would a lender lend to a company that's got no history? So basically, when lenders are lending to limited companies, they're always going to be looking at the people who sit behind the company and taking personal guarantees in 99% of cases from those individuals. Now, some lenders take personal guarantees from the directors, some from the directors and all of the shareholders, and some lenders are directors and shareholders with a certain percentage of shareholding. So it's not straightforward of who they're going to underwrite, but basically it's going to be, broadly speaking, directors and shareholders. So when you're applying for a limited company mortgage, it kind of goes, what's the company name, what's the company address, what's the company number, what's the activities of the company? And then it moves on to asking about individuals as if it was a mortgage application in your personal name. So the real onus is on the individuals behind the company. Now, because the lender's taken this personal guarantee, what this means is that actually, in the event of a default, their buck stops with the borrowers rather than the limited company. So this is the people they're going to be coming after if the bank were to lose any money. So actually, the limited company is just a wrapper that sits around the lending. Really, actually, everybody's interested in the people that sit behind the company, because that's who ultimately is responsible for the mortgage getting paid and the lender getting their money back. Now, in terms of a personal guarantee, so yeah, most lenders, like 99% of the time, you'll be asked to provide one of these. What are the pitfalls of this? So I guess the first thing is that having a limited company doesn't abdicate you from responsibility of making sure the lender gets their money back. What it doesn't do is impact your ability to, for example, get a home mortgage. It wouldn't be that part of your underwriting, I've given a personal guarantee on a mortgage in a limited company, therefore it impacts my affordability to get a mortgage for my own home. Another misnomer is that some people say, but you know, the lender could come after me and that puts me at risk. But actually it's the same as if you were to borrow money in your personal name. So I guess the kind of key message here that using a limited company doesn't protect you or waive your responsibility to make sure that the mortgage doesn't get paid. So that's kind of personal guarantees and borrowing on day one. Another thing that's just worth talking about briefly is your SIC codes. So when you set up your limited company, you won't be asked to provide these. A SIC code is a standard industry classification code. And what it does is it essentially tells people what your company does. So every single type of business, whether it's dentistry, IT consultancy, greengrocers, you guys will all have a code that relates specifically to your line of business, and letting of property is no different. So when you're setting up your limited company, you won't be asked this code, but when you do your company's first return to HMRC, you are going to be asked to, to Companies House, you're going to be asked to provide these codes. The codes that lenders like to see are 68100 and 68209, and these specifically relate to letting of property. If you then sort of think, well, actually, I am thinking about doing, I don't know, a bit of cake making on the side, so I'm also going to put a code which says that I'm going to do cake making within my limited company. Most limited company lenders are going to not lend to them because you stop being an SPV, a special purpose vehicle, i.e. a company that's set up only to deal with property rentals. You become a property rental company that also does cake making. I don't know why I chose that example. So you actually need to keep your SIC codes very, very specific to letting of property if you want to be able to access SPV type lenders. Now, in terms of company structures, as I mentioned, there are lenders are looking at personal guarantees from directors and shareholders. One of the things we often see is what's called layered companies, which is where you have a company which is 100% owned by another company, which is then owned by people, so layered companies. Why do you end up in these situations? So sometimes it can be that someone's got a trading limited company, so they are a cake maker full time. They've got a bunch of cash in their business. They want to buy a buy-to-let property. They don't want to muddy the waters. They want to keep their two different businesses separate, but they want to get the money they've kind of saved up into their trading business, their cake making company business, and use that as a deposit. So rather than take that money out into their personal name and pay tax on it, and then re-lend it to another company, what they would do is set up a subsidiary, so a company that's owned by the cake making company, to buy the property in. And this means that you can move your deposit monies from your cake making business into your property rental business without paying tax on it, because it's classed as intercompany movement. So that's why you often end up with these layer situations. Another situation might be for property developers, which is too complex to go in here, but you can have limited layered companies, and there are lenders that can lend to those. So if you find yourself in that situation where a layered company is the situation or structure that you need to use, we can help you, don't worry. In terms of other than that, really limited company lending, so there's not so much that's so different from applying for a normal buy-to-let mortgage. There are a couple of kind of things. So first of all, you're going to need a limited company bank account. You can start a mortgage application without the bank account, but the lender cannot issue a mortgage offer if they haven't got a direct debit mandate. So you need to have your bank account set up before the lender can issue your mortgage offer. Do shop around. Limited company bank accounts are not free. They charge you for lots and lots of things. So every time you make a payment, for example, they're going to charge you a small amount of money. So it's really worth doing some digging around. Somewhere like, I'm sure, Money Supermarket would be a good starting place for that. Personally, I use Virgin. I found them very good. They've got a really nice app. In my bank account for my limited company is so straightforward. It's literally rent in, mortgage payment out. It's like 3 transactions a month or something. So there could be better ones that are involved for those with larger portfolios, more transactions going on. And then the other thing just to say is solicitors. So with limited company lending, the lenders tend to be more restrictive in terms of the types of solicitors that they accept. So what you will find is that whereas if you were doing a purchase with BM Solutions, you can pretty much guarantee that any reputable solicitor would be acceptable to BM Solutions. Not so for limited company lending. So our advice here is always, you mustn't let the tail wag the dog. Don't find your solicitor and then try and find a mortgage lender who fits around your solicitor, because you're going to end up potentially paying really, really expensive interest rates. That's not a sensible, cost-efficient thing for you to do. Let's find a lender who's going to be able to lend to you on a rate that's actually competitive. And then what we will do is give you a list of all the solicitors that are on their panel, and we can get you quotes here as well. We can organise that for you. And then go ahead that way. That's a much more efficient way financially in terms of organising your finances. So don't get your solicitor, don't pay any money to a solicitor until you know which lender you're going to use and making sure they're going to be acceptable. Otherwise it can become quite expensive. So that's like a really quick roundup. There is absolutely loads of information on our website on limited company lending. Equally, if you want to look at the types of rates, you can go on our calculator. So do go and have a fiddle around there, or even better yet, just give us a call. You know that we'd love to speak to you about all things mortgage related. And just to recap our number, 0345 345 6788. Anybody going to the landlord show at Excel on Friday or Saturday? If you are, come and say hello. I'm actually presenting on both days, and also I'm in a panel debate on Friday as well, which actually looks to be quite lively. There's some really good speakers, so do come and have a watch if you're in the area. It's free to attend as well, and it's actually a really good show. For those of you who won't be seeing at the show, have a fantastic week, and see you again next time.